If you want to support the channel, make sure to claim your free stock by signing up with Robinhood with the link down below. You've seen how Tesla stock has risen, people making a lot of money, and you wonder if it's too late to get in. Well, in this video, we're going to analyze how does the future look for Tesla? Will they continue innovating and disrupting industries? In this video, I'm bringing an example of how Tesla is disrupting the ride-hailing industry. Tesla is planning on starting a robo-taxi network. The company plans to enable every Tesla vehicle built since October 2016, all of which have been fitted with a suite of cameras and sensors, to upgrade its software and computer to support point-to-point autonomous driving with no human taking over. This in turn will enable the car to offer rides to members of the public autonomously, all without requiring a human driver. It's this part of the plan where it starts to become interesting. Tesla aims to roll out a smartphone app similar to Uber, where users can hail a ride from Teslas in their area. Vehicle owners can specify times of day when they want their car to join the network, enabling them to be used when the owner doesn't need it. The owners can then earn money from their cars during the day. In other words, your Tesla could pay for itself. Now, if you could buy a Tesla and have the Tesla work for you and pay for itself, why in the world would you buy any other vehicle? This will disrupt the auto industry forever. Although the robo-taxi networks will probably not be completely available this year, Tesla has been making a number of preparations for this new phase of its business, tweaking terms to ensure it has enough cars for cities and placing cameras inside the cars, so owners can track them on their taxi trips. The semi-autonomous Tesla Autopilot system is already taking over drivers' tasks in limited circumstances, like turning off the highway at the correct exit. Tesla plans to release a feature-complete version of the software, where the vehicle can drive itself from A to B without human intervention. At this stage, the car is still expected to require a human driver to watch over, similar to the existing Autopilot system. When autonomous taxis commercialize, Uber and Lyft will not be able to collect the 20 to 30% take rates they enjoy today. Now, however, they could be facing a more immediate threat: a Tesla ride-hailing network. Tesla has 4 more competitive advantages relative to other ride-hailing players. These are lower operating expenses. The cost to drive a Model 3 is roughly 30% less than that of a Toyota Camry. In other words, both Tesla and its ride-hailing drivers could benefit from operating costs lower than those at Uber and Lyft. Based on ARK Invest's analysis, 20,000 ride-hailing service miles and 13,500 personal use miles per year, the cost to operate a Tesla Model 3 will be roughly 26 cents per mile, 30% lower than the 38 cents per mile to operate a Toyota Camry. Tesla's cost per mile advantage could play out in a number of ways: higher take-home pay for drivers, lower prices than Uber and Lyft, and/or higher platform fees for Tesla. A combination of all three could be possible. More efficient financing and insurance. Tesla probably will self-insure and offer lower rates to its drivers. With the ability to collect driving data continuously from its vehicles and to provide discounts for the use of Autopilot, Tesla will be able to offer rates lower than traditional insurance companies. While Uber does not break out insurance costs, in 2019, Uber's short-term insurance reserves totaled $941 million at the start of the year, or approximately 13% of cost of goods sold for the full year. Lyft's insurance cost, inclusive of scooters and bikes, was 19% of cost of goods sold in 2019. For personal car insurance, Tesla's rates are nearly 30% below average. With a vertically integrated network, Tesla should be able to offer attractive financing terms to prospective ride-hailing drivers. Say $7,000 for down payments and the balance paid from a cut of driver earnings on the network. Coming off lease, used Model 3s could seed the network at launch. Moreover, Tesla should be able to finance its own vehicles, while Uber and Lyft pay fees, another layer of costs, to third-party partners. While traditional auto loans are risky, Tesla will be able to disable ride-hailing vehicles, potentially retrieving them autonomously if owners stop driving them on the network. Higher trade-in or residual values. If the past is prologue, the trade-in or residual value of Tesla vehicles should be much higher than that for traditional ride-hailing vehicles. Tesla's Model 3 has retained 94.5% of its value on average after 1 year, nearly 15 percentage points, or 20% more than the 79.9% of other vehicles on average. Unlike most vehicles, Tesla's performance improves with time thanks to over-the-air software updates and Autopilot. A Model 3 purchased in 2017, for example, can drive farther, faster, and more safely today than it did 3 years ago. As a result, Tesla's ride-hailing drivers should benefit from a vehicle that not only improves in performance, but also retains value relative to its counterparts over time. Further, Tesla's full self-driving package could offer drivers some job protection against automation. If Tesla does convert ride-hailing vehicles over the air into fully driverless vehicles, their owners should continue to earn income over time without driving, even if human drivers become obsolete. Then, former Tesla drivers would have invested in the equivalent of autonomous taxi medallions at bargain basement pricing, as shown below. Although traditional taxi medallions have come down from their million-dollar highs, they still are nearly 3 times the price of a Model 3 with a full self-driving package option. Premium prices. Moreover, Tesla could charge premium prices for its service, like an Uber Select or an Uber Plus, which are $1 to $4 per mile more expensive than Uber X, depending on the trip length and region, as shown below. Of course, Uber Select drivers also are completing Uber X trips, so average take-home pay averages out closer to $1 more per mile. Premium-priced services already in the market suggest customer segmentation possibilities, with higher take rates for luxury cars. Bottom line, Tesla's ride-hailing service could spell disaster for Uber and Lyft. Both are unprofitable today, even more so after the coronavirus crisis. If Tesla were to launch its ride-hailing service within the next year, as fears of crowded subways and buses linger, Tesla could capitalize on pent-up demand, perhaps hiring former or current Uber and Lyft drivers, particularly given their respective decisions, both before and during the pandemic, to limit new driver applications. With better take-home pay potential, not to mention biodefense mode, the Tesla ride-hailing network could offer a compelling value proposition to both drivers and customers as they emerge from the COVID-19 crisis. I believe Tesla is disrupting so many industries at the same time, and that's why I'm invested in Tesla for the next 20 years. The point I'm trying to make with this video is that, although Tesla's stock price has risen a lot, with the upcoming innovation and disruption, this is just the beginning of something even bigger. Do you own Tesla stock? Let us know down below in the comments. Also, if you enjoyed or learned something from this video, please smash that like button for the YouTube algorithm. It's free and it really helps us a lot. And if you like making money on the stock market, subscribe to our channel. Thank you.